today's Daily Dose of Market Insights. Very good morning to all. I'm Kelvin here. Today will be the Wednesday, the 29th of October 2025, and as well as Fed Day as well. So before we kickstart the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, so I hope that the screen is good. Okay, give me 1 second. Okay, I think everything is all right over here. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so before we kickstart the gist of the daily dose, which is the intraday technical outlook chart of all the 12 asset classes, given that today is a key pivotal day. Why? Because we have the FOMC meeting, as well as after the close of the US session, we have 3 mega cap stocks that are reporting their Q3 earnings. We will touch more about that in a while time. So before we do that, let's have a quick recap what has taken shape yesterday in terms of the news flow, the relevant economic data releases, as well as for today's early Asia session before the start of our daily dose at 11 a.m. Singapore time, with in relation with their reaction that causes the intraday movement of the broad-based cross asset classes. So let's start with the US session yesterday. So in the US session yesterday, the bulls continues to dominate for the US stock market. So over here, what you see the US stock market, we see a slew of green, except for the Russell 2000 that has a profit-taking activities taking place, down by negative 0.55%. As for the SPX, the Nasdaq 100 and the Dow Jones Industrial Average all posted gains. So the top performer is the Nasdaq 100, which is up by 0.7%. Thanks to AI optimism team play that is back in the forefront yesterday due to 2 positive news flow that are pertaining to the AI optimism, which drive the outperformance of various mega cap technology stocks, especially the US semiconductor sector. So what are these 2 news flow over here? So the 2 news flow that has taken shape, give me a minute, not this, is this Microsoft with OpenAI. So now OpenAI officially gave Microsoft 27% stake in OpenAI shares over here and completes a for profit shift. So what it means over here is that, give me a minute, now let me share with you guys on the highlight of this news flow. Okay, so Microsoft will have access to OpenAI technology until 2032, including models that will achieve artificial general intelligence, that is AGI, and will continue to receive 20% of OpenAI's revenue until an expert panel verifies AGI over here. So now with the restructuring now complete, OpenAI is forming a for-profit company called OpenAI Group PBC over here. So that means OpenAI now is more skewing towards a revenue-based model after this restructuring has been taken shape. That means, i.e., in closer steps to actually shift for a non-profit organization to a profit organization. So that actually potentially reduces the what they call it, the AI bubble risk. Do not forget over here is that there's a lot of talk saying that OpenAI is unable to hit its so-called revenue target to justify its 500 billion valuation at this point in time. So that bubble risk has been reduced after this we call it share restructuring with Microsoft. And also another positive news flow yesterday was out from NVIDIA. So NVIDIA yesterday has this we call it exhibition or a roadshow over here, where its boss, Chief Executive Jensen Huang, announced a slew of new partnership and say that the company latest chips are on track to generate $500 billion in revenue. So they are teaming up with Uber Technologies, Palantir, CrowdStrike, among others, to ensure its technology remains at the heart of this AI frenzy over here. So that also created a positive feedback loop into the US semiconductor sector yesterday. So what I could see over here is that in the heat map, we see a deep, we call it a green, among the US semiconductor sector, and the top performer for sure will be Nvidia, up by 5%, and AVG or Broadcom up by 3%, and Microsoft also gained by 2%, outperforming the general market yesterday due to this latest share restructuring plan with OpenAI. And also the other two mega cap stocks also outperformed the general market yesterday, where Amazon is up by 1% and Tesla up by 1.8% over here. Pardon me about my back cough. All right. So the next thing over here I want to share with you guys over here is this ongoing trade deal optimism that between China and US over here. So based on this latest flow, yeah, give me a minute. Let me share with you guys. I think I do not have it open in my screen, so let me drag it up. Give me a couple of seconds to bring it up. Here is the one. Yes. So this just hot off the oven in early today's Asia session. So we know that for the very, very long time since post-pandemic, means after 2020, Trump and Xi has not been meeting up because for sure Trump is no longer the president at that point in time. So for now, he finally has a chance to have a one-to-one meet up with China presidency tomorrow on the sideline of the APEC summit meeting. And this meeting is very important. Why? Because prior to the meeting, their respective trade officials or officials that is involved in the trade deals negotiation between China and US. That means the point man for US will be Treasury Secretary Scott Bessent, and the point man for China will be China Vice Premier He Lifeng. Both of them has kind of cemented a framework in order for these two country president to meet up tomorrow. And before the meet up tomorrow, Trump actually kind of jumped the gun, saying that he expected a lower 13 tariff and Nvidia talks with Xi. All right, so what did that is very rosy. So what he expect over here is he expect things to do up pretty well. And Trump was considering cutting a 20% tariff on China products to 10% on Chinese good over this fertility over here, if I pronounce it correctly. And also, Trump also suggested he was open to providing China with access to NVIDIA Blackwell AI processor as part of the trade deal. So we know that US has been blocking, we call it a higher tech access, especially those who pertaining to AI, to China over here, to preventing China to become the supremacy in AI technology. But however, things now has seems to change slightly, where Trump decided to throw in towel and to get China to able to access Blackwell AI processor, which is the top end processor rather than the lower end processor. So that would actually represent a major concession over here. All right, and he goes against the national security hawks in Washington. All right, over at this point in time. So that is actually a very rosy news towards this ongoing China trade tension situation. That means if this were to take shape, that means China got to give him something. That means, i.e., China will be either buying pretty much significant soybeans, and as well as allow China rare earth exports to flow much more freely into US. Do not forget over here is that in order to build this AI chip by US company, they require raw material inputs. And right now, China has the biggest market share of these raw material inputs or the various category of rare earths. And because of China able to kind of call the trump card over here, irregardless of how well your technology is in the US, if they are not able to get access to these rare earth materials, the US semiconductor firms or US manufacturing that manufactured this semiconductor may not be able to ramp up their production as planned. All right, so something latest development that takes shape in the global markets right now ahead of tomorrow face-to-face meetup between Xi and Trump in Korea. All right, so then that also has a positive feedback loop into the Asia Pacific stock market. So we start to see Nikkei 225 up by 2%, another fresh all-time high. That is within our expectation. Later I'll share with the intraday chart of the Japan 225, which represent the Nikkei 225. And a bit of profit taking in the Hong Kong stock market. The Hang Seng is down by negative 0.33%, but the China A50 is basking on this easing potential trade deal between US and China, or the easing of the US-China trade tension due to this potential trade deal with China after US President Trump dovish approach towards the two-country relationship, which I shared with you guys earlier. The CSI 300 is up by 0.5% over here, and the rest of Asia continues to bask in the bullish limelight. The Kospi is up 1.6%, the TARX is up 1.26%. A bit of profit taking on our STI is down by negative 0.24%, and the ASX 200 is down by negative 0.9% due to a higher than expected Australia CPI number that reduces the chance of another interest rate cut from RBA. So that suck out a bit of liquidity in the Australia stock market. So that explains it's underperforming, which is down by negative 0.9%. So in early today's Asia session, we have the Australia Australia CPI number data that came up earlier on. So let me explain to you guys what do I mean by this. So at 8:30 a.m. Singapore time, we have two different set of Australia CPI data that released. One is a quarterly that is more backward looking, and one is on the monthly that is much more in line with the current inflation trend. So let's talk about the quarterly one first. So if you look at the 3-min CPI data, 3-min, that means is the cost is equivalent to core CPI data that strip off the much more volatile items like energy and food in the Australia CPI basket. So for Q3 year on year, it actually rose above market expecting. Okay, market is expecting at 2.7%, and it also rose above the previous quarter Q2 of 2.7%. So this rise of 3% in Q3 is the biggest quarterly jump since 5 quarters ago. All right, over here. All right, so it's the biggest quarterly jump since Q4 2024. Okay, so pardon me, it's not it's 3 quarters ago, not 5 quarters ago. So there is actually a big kind of a turnaround, a push up in Q3. And if you were to look at the numbers from the monthly one, which is in September, annualized, is up 3.5%, also above what market is expecting at 3.1%, and also above the previous month of August print of 3%. So if you look at the monthly CPI indicator, okay, it rose to, come on, why is hang? Okay, give me a minute. It rose to 3.5%, and if you go to the 10-year, so this 3.5% is the highest level since June 2024. So that's close to about what, 12 months high, something like that. All right, not 12 months, sorry, pardon me, it's actually a 15-month higher over here. So this is the highest reading since July 2024. So that actually with these two we call it higher than expected CPI data, and especially the trend of the monthly CPI data that increases significantly since June 2025 this year, that's a significant jump, that reduces the odds of a RBA rate cut for this year, all right, for the remaining part of this year. And with this reduction in rate of RBA rate cut, that actually causes the Aussie dollar to jump against the US dollar today. All right, so if you look at the 5-day rolling performance chart of the major dollar pair, that means by using, okay, come on, yeah, this is 5-day rolling performance as of 29th of October. The dollar is the weakest against the Aussie, which is down by negative 1.64% based on the 5-day rolling performance basis. And if you look at the 1-day rolling performance basis based on the trend in the last 24 hours, it's down by negative 0.22%. All right, so the dollar right now is the weakest against the Australia dollar due to the hotter than due to the higher than expected CPI data coming out from Australia. And also the dollar is also trading pretty much lackluster against the other currency as well. All right, so this for the dollar over here at this point in time. So now with that, let me touch on the other markets pertaining to other markets over here. So gold price continues to be very, very weak after yesterday's technical breakdown of the key support level of the 20-day moving average. No, prior technical breakdown. That means not yesterday. On Tuesday, where we the price action of gold broke down below 4,056 and broke down below 20-day moving average. And yesterday, I featured gold as my chart of the day, which is a bearish technical play. Later, I'll share with you. First support level has really been hit, which is the 3,800 plus level. But let me share with you the chart of the price action of gold right now. And there is actually fundamental misalignment. That means it's more driven by sentiment factor than fundamental factor at this point in time. Okay, so this is a chart of gold. All right, so gold ever since there's this bearish breakdown of the 20-day moving average and the 4,056 former medium-term pivotal support level, there was a bearish breakthrough, follow through on this Tuesday over here on Tuesday, where we have our gold as our chart of the day for a bearish short-term push down. The low of 3,886 has been made, all right, over here. So it hit a low of 3,086, and in today's Asia session, there's some consolidation at 0.27. All right, so I did mention that with the bearish breakdown of this 20-day moving average, it could start to see a multi-week corrective decline sequence over here. And also given the fact that the daily RSI now has really exit from the overbought level, and also has starts to break down below a trend line support level as well. Okay, and hasn't hit the oversold level yet on the daily basis. So that means, i.e., from a multi-week perspective, there could be still further downside. All right, so later we'll take things one step at a time from a technical perspective. But let me share with you guys that the downside movement right now of gold in the last, in fact, only last since the black bearish Marabuzu candlestick on 21st of October, where gold plunges by 5.3%. So that is the so-called biggest daily loss since what I think three years back or something like that, right? So ever since this black Marabuzu candlestick of 21st of October, where it's down by negative 5.3% on a daily basis, that potentially price action weakness since then is more momentum driven rather than fundamental driven. So what do I mean by this? So if you look at the intermarket correlation of gold with the US 10-year Treasury yield, so we know that the previous burst up in gold from this sideways of triangle range configuration that formally took shape from 22nd of April all the way down to 18th of August, where price action broke out on 29th of August or late August this year, has been driven by a rather inching downwards or medium-term downtrend phase of this 10-year US Treasury real yield over here. And the US 10-year Treasury yield going to plunge lower after Fed Chair Powell dovish speech at the Jackson Hole Symposium in the last week of August as well. And ever since the 10-year real yield continues to plunge lower, your gold price continues to increase as well. But right now, if you look at the 10-year US Treasury yield, it's also going to plunge lower and threatening to retest this major support level at 1.66%. And the recent bounce from this 1.6% that managed to survive on last Thursday has shaped this bearish reaction candlestick right exactly off the 20-day and the 50-day moving average and the upper boundary of this medium-term descending channel that has been acting as a resistance for previous rebound, the one on 10th of October, previously on 1st of August this year. All of them after this rebound ended all lead to bearish reaction of it. All right, so there could be a big risk that this 1.66% support level may break down to the downside as well. But how come this bearish reaction of this 10-year Treasury yield is not contributing to a push up in gold prices that it did previously in the past? That means that could actually explain that in the last few days or the last few weeks of gold price movement, there has been a lot of leverage short-term long players got their stop loss level hit. That means, i.e., overcrowded longs that has been taken shape on the leverage side in gold XAU/USD. So that explains why the overcrowding and the momentum factor where stop loss level got triggered and it pushed now prices lower, and that actually induces more short-term leverage bearish players placing these bets on a short-term correction in gold has taken shape. And this particular factor now has a higher say over the fundamental factor, which is still supporting a long-term bullish trend in gold. So definitely for sure, the key support level to watch in the longer term perspective will be at the 3,440 level, which also confluence with the 200-day moving average. So if prices were to reset at this level over here, that could allow longer term players to come into the market and to actually establish long position in the markets at a better prices, given the overcrowded net long position by short-term leverage speculators potentially right now, that causes gold price to cascade lower down to the downside, ignoring the longer term fundamental factors that are supporting the longer term major uptrend of gold. All right, so that's for the gold situation right now that I want to explain to you guys. All right, so with that, let's have a quick look at the CME FedWatch tool for now. All right, so based on the CME FedWatch tool, we know that today it will be the FOMC meeting. So FOMC meeting today will come in at 2 a.m. Singapore time. That means later I'll show you the calendar. 2 a.m. Singapore time, early Wednesday, 30th of October, and at 2:30 p.m. 2:30 a.m. Pardon me, but time to stay at 2:30 a.m. early Wednesday. That means 30th of October. Singapore time, we have their boss, Fed Chair boss, Powell speaking. All right, so market now will be more focused on the speech of Powell instead. Why? Because almost 99.9%, 100% chance the market is expecting the Fed to cut. Okay, the Fed, he will very unlikely it will hold due to the wisdom of the market, and we're still to hike right now. So market is expecting a cut of 25 basis point to bring the Fed funds rate to 3.75% to 4%. All right, so that will be the second cut of this year, after being on hold for the entire year until the entire first half of this year. But now market will be now concerned about the extension of this ongoing interest rate cut cycle. All right, will it extend into 2026? The most important one in the near-term horizon. So you look at the aggregate tab over here, market is expecting also a high chance of 91% that the Fed will potentially do the third cut off for this year to bring the Fed funds rate down lower to 3.5% to 3.75% on the 12th of on the 10th of December 2025 meeting. Sorry, I'm still have a cough. And also, very quickly, on the next subsequent meeting in 2026 over here, market is also expecting a 3 interest rate cut of rather high odds of more than 70%. So market is now expecting a 85% chance the Fed will do another 4th cut in 2026 on the 18th of March 2026 meeting to bring the Fed funds rate lower by another the 4th 25 basis point cut to bring it lower to 3.25% to 3.5%, and another high chance of 94% on the 29th of July 2026 meeting to bring it down lower to 3% to 3.25%. So that will be the 5th cut since the first cut in September, all right, this year. And also not so high chance now, so this will be at around 65% to 66% or 61%, that the 61% that the Fed will do another 6 cut to bring the Fed funds rate down to 2.7% to 3%, 2.75% to 3% on the 9th of December 2026 FOMC meeting. So net overall, market is still expecting 3 interest rate cut of a rather high chance for the first 2 cut. The third cut will be not so high, but it's still rather high. It's still above 50%, which is 61%. For the 6th cut to come in all, since the interest rate cut cycle kickstarted in September this year, to bring it down to 2.75% to 3% on the 9th of December 2026 meeting. So market is still expecting a dovish Fed for this interest rate cut cycle to extend further for potentially 3 interest rate cut into 2026. So will Fed Chair Powell change his tonality this time around? So if he starts to say that, market is still rather high in terms of inflation, that doesn't justify it, because the inflation number starts to cool down in the September in what I call that in the September CPI print that was released on last Friday, and also with Trump potential dovish rhetoric that I share with you at the start of today's daily dose. Let me flash out over here for those guys who are late to the live session. So this is what Trump mentioned. So he attempt to lower down the tariffs of China from 20% tariff to 10% tariffs on Chinese goods, and also suggested provide China with higher access or to easier access with higher end AI chips, which is the NVIDIA Blackwell AI processor. So with that, that could net overall lower down future inflation expectation. So I don't think Fed Chair will have the opportunity to talk about sticky inflation this time around during his press conference over here. So he may start to say that inflation may now starts to plateau off due to the latest trade relationship development between US and China after US President Trump olive dovish rhetoric just out a while ago, which I share with you guys. All right, so that's for the first segment of the daily dose. So let me now move on to the second segment of the daily dose, which is the intraday technical outlook on those 12 broad-based cross asset classes over here. All right, so before we jump into that, let me expand my screen and let me take a sip of water first before we continue due to my bad cough. All right, over here, let me take a sip of water. Or 2 sips of water, that's much better. All right. Okay, let me share with my screen. Okay, so let's start with the FX market. All right, so I hope that the screen is good, yeah. Okay, the screen should be able to see. All right, okay. So let's start with the FX market first. All right, FX market. Okay, so this will be the dollar. Okay, so the dollar now in the last few days it came down and now it managed to hold support at the 20-day moving average again. All right, so now the key resistance level to watch will be here, 99.30, the upper limit of this ongoing symmetrical triangle range configuration that has taken shape since the medium term symmetrical triangle range configuration that has taken shape since the low of 1st of July. And also there will be an intermediate support level after 2 days of bounce yesterday and in today's Asia session intraday at the 20-day moving average, which is at 98.66 level. All right, so these are the two key support levels to watch out, two levels to watch out for over here on the intra. So if this support level breaks on the intraday basis during when Fed Chair start to give more of a dovish guidance, potentially the dollar index could float down to 98 level, which is close to the 50-day moving average, and as well as the previous minor swing low of 17th of October that gave rise to 2 days of bounce that was since 3 days of 3 days of bounce of the activity on the intraday basis that is being seen on last week. All right, 2 weeks ago, I would say 2 weeks ago. All right, over here. So with that, let's take into the intraday outlook on the euro dollar first. So the euro dollar managed to bounce as expected, but didn't hit our first support or didn't surpass our first resistance at 116.77 over here and starts to trade slightly downwards and now retesting the 20-day moving average. So no change in terms of pivotal support. So pivotal support, I don't want to target it be so tight at 116.25, which is my first support level that managed to bounce yesterday. If I were to actually, if you guys recall that intraday technical outlook that we have on Monday, so it bounced exactly at the level that we highlighted, the first support level. So as long as the pivotal support at 116 figure level holds, we will still maintain that bullish bias. So upside trigger level will be at 116.77 to increase the chances of further bounces of the euro dollar heading up towards 117.20 next. Above it, potentially seek up 117.60 and 117.20 will be very important because this will be the potential neckline resistance of this ongoing minor double bottom formation. All right, first bottom, second bottom that is forming right now over here. On a bearish breakdown below 116 figure level will negate or invalidate this bullish bias slash recovery scenario to seek out the minor swing low of 22nd of October at 115.80. A breakdown below it will retest the key medium-term pivotal support area at 115.40, 115.30 next. So for now, level still remains the same, but still keep that bullish bias slash recovery scenario. Bullish bias slash recovery scenario probably will increase with the breakout of 116.77, which is our intermediate resistance levels slash upside trigger level 116.77. 116.77. All right, that's the level to look up for. That's for the euro dollar. Okay, next up will be the sterling pound. So the sterling pound is more weaker than the euro dollar if you look at how the price action configure. So right now it's actually testing that pivotal support level that we highlighted over here. So what we could see is that price action going to inch downwards. All right, so with that, okay, so let me have a neutrality stance instead. So there will be the 20-day moving average over here, or the 200-day moving average. Okay, let me put it slightly. Okay, coming close to the 200-day moving average. Okay, so this level here, let me remove. Okay, so what's the 200-day moving average? Is at 132.40. Okay, 132.40. 32.40, 32. So let's have a neutrality stance instead, given that the price action is rather lackluster, but still holding above the 200-day moving average, which is key, and also still holding above the previous minor swing low of 14th of October before that minor bounce take shape, and thereafter the price going to slide again after can't have a proper breakout above the 50-day moving average over here. Okay, so let's have a neutrality stance for today, given the lackluster price action. And I do not want to turn outright bearish because the US dollar index hasn't broke above the resistance level yet, which I shared with you guys earlier on in the dollar index technical levels to watch on its daily chart. Okay, let me put this level here. 0.32. Come on. Let's okay, give me a minute. 1.32 50 slash 32.40. Okay, which is 32.40 is the 200-day moving average over here. So this will be a neutrality stance. Okay, lower neutrality limit. Upper neutrality limit over here will be this level here. Okay, this level that previously was there's a minor bounce during yesterday's European session. That after that the bounce can't maintain and it starts to plummet during the US session yesterday. So this will be 133.10. Okay, 1.3310. Okay, so given the fact that why I turned neutral on the sterling dollar, firstly, yes, it's playing around with the short-term pivotal. Okay, this is sterling dollar, GBP slash USD. Why I turned neutral? Because number one, it's still holding above the 200-day moving average, can't break below it. And also the US dollar index hasn't broke above the key resistance level. So neutral between 133.10 and 132.50 slash 32.40. 32.40 is the 200-day moving average. Only a breakdown below 132.40 may see further weakness to revisit the medium-term pivotal support zone at 132.10, 131.70. A bullish breakout above 133.10 will reignite the short-term intraday boost to revisit the 133.90. Let me slash it up because there's this minor resistance here. So it's a level 132, 133.75. Come on. Okay, let me open up the dialog box, the boxer. Or sometimes it's very slow when I'm trying to amend things while being live on the webinar. So just be patient with me. Let me call up the box. Sometimes it's also very frustrating for you to wait to open up. Okay. 75 slash 33.90. Okay, so we also correspond to the 20-day moving average as well. Okay, so that's will be the key levels to look out for on the sterling dollar, flipping to a neutrality stance. Neutrality stance for today, which I explained earlier why 133.10, 132.50, 132.40. Okay, so that's for the Aussie dollar. Very quickly, let us move on to the sterling pound. No, no, that come on, what I'm talking. So that will be the sterling pound, right? That will be sterling pound. So very quickly, let us move on to the Aussie dollar over here. All right. So the Aussie dollar, within our expectation, managed to bounce. All right, over here due to that hotter than expected CPI data, clear our resistance level 65.70, and now fast approaching the next resistance level at 66.20, 66.30 over here. So with that, what I'm going to do now is I will tighten my pivotal support level towards 65.60 over here, and my first support level to watch out for will be the minor swing low area here before the release of the Australia CPI data at 65.80. So any pullback between 65.80 and 65.60, I will look out for a bullish bias to actually remain my bullish opportunity for Aussie dollar. Next resistance level to look out for will be at above 66.30, will be 66.55 on an intraday basis, which is the congestion area over here from 15th of September to 18th of September. Okay, so that will be the next resistance look out for 66.55. So still maintain that bullish bias in any form of any pullback, as long as this minor pullback didn't surpass below our Titan pivotal support level at 65.60 for today. Only a bearish breakdown below 65.60 will invalidate today's bullish bias to kickstart a minor corrective decline sequence again, revisiting 65.30/65.15 level next. So that also corresponds with the 20-day moving average. If 65.50 level couldn't hold, this minor corrective pullback sequence may extend further towards the downside towards 64.75. And this situation may occur if Fed Powell continues to remain rather stubborn and say that inflation is remaining sticky in the US economy. All right, 64.75, that will be the next level, next support level to watch next. Now, with that, let us proceed to the dollar yen. All right, so the dollar yen plunges down as expected. So this was my support level that I highlighted yesterday, 152, 151.50, maximum 151 figure. So 151.50 has been hit. And today, in today's Asia session, it starts to do a bounce over here. All right, so this bounce, it comes with a bullish divergence. So I could see here, there's a bullish divergence taking shape. Okay, so with this bullish divergence, that means i.e. there could be a bigger retracement instead. Why? And also from a Elliott wave perspective, the 5-wave down has already been completed with a 5th wave target at 151.50. So what do I mean by this? Minor wave 1, minor wave 2, minor wave 3, minor wave 4, minor wave 5. And if you do the Fibo retracement, the Fibo extension for that 5th wave target, okay, we start to see it 0.618 has been done. Okay, so the rest of 0.618 is not being shown. The 0.618, 0.618, yeah, 0.618. Notice the 0.618 is very close, has really been met. So with this 0.618 being met very closely and also hitting our support level that we highlighted yesterday, 151.50, the graphical support, there could be a deeper minor corrective rebound taking shape to retrace at least 50% to 61.8% of this 5-wave down. So what do I mean by this? So if we do the Fibo retracement, okay, the 50%, come on, the 50% will be at 52.35, the 61.8% will be at 52.64, roughly this level here. Okay, this level, these two zones, 52.35, 52.64. So there's a former graphical minor swing low, now turns into a pullback resistance as well. So once it hit over this zone over here, I don't want to use my pivot. This level will be my pivotal resistance because just in case of any whipsaw. All right, so just in case you might see a long tail before coming down. So I will still use my pivotal resistance at yesterday's level, which is a very key bearish reaction level at 153.20. Previously on 10th of October, it can't surpass. And previously on 2 occasions on Monday, 27th October, and 27 October Monday Asia session and 27 October US session, it can't surpass 2 occasions. So this is giving a very key pivotal short-term resistance level rather than using 152.65 that hasn't been tested yet, just only a feeble retracement level, acting as a future significant resistance next. That I mentioned, because key risk event, it could actually see a spike up first before coming down. So I'll be using 153.20. So in any bounces, I will use this bounce to fade that strength and maintain that potential bearish bias on the dollar yen at 153.20 short-term pivotal resistance. So as long as 153.20 short-term pivotal resistance not surpassed the upside, next support level to watch on the intraday basis will be 151 figure level, which is the 20-day moving average. Below 151 figure level, the next support level will be this graphical minor swing low area over here at 150.50. Okay, let me put it right in. Okay, 150.50. Come on. So every time there will be a lag. Okay, give me a couple of seconds for it to get up. All right, so you got to blink first before I can write. Yeah, good. 151.50. Okay, so this will be the next support level to watch after 151 figure level. All right, so that sum up the dollar yen and the intraday technical outlook on all the 4 major US dollar pair. So let me take a sip of water first due to my bad cough before we proceed to the major stock indices. Okay, major stock indices. Let us start with the Hong Kong 33. Okay, so the Hong Kong 33 continues to surge upwards as expected over here. All right. Okay, so in fact, okay, sorry, pardon me. There is actually a holiday on the Hang Seng market today. All right, my apologies earlier. So the Hong Kong market actually is closed for a public holiday today. Okay, what holiday I'm not sure, because the market is closed. So if you look at it, it's closed for a public holiday. So that's why it's not reacting positively to that earlier China trade tension news flow. Easing of the trade tension news flow. So, but nevertheless, this was yesterday's price action during the US session. It managed to clear above this first resistance level, which is 26,570. Right, so now this will be a pullback support. So right now, I will actually tighten my pivotal support level to this minor V-shaped bullish reversal that has taken shape on Tuesday, means yesterday's Asia session before that bounce meter rise in the European session and the US session thereafter. So using that also correspond to the 20-day moving average as well. So using a tightened pivotal support level at 26,240, still maintain that bullish bias on Hong Kong 33 for tomorrow once the Hong Kong stock market reopen. That will be Hong Kong 33 is representing of the Hang Seng index. So the next resistance level to watch on the very short term basis will be at 26,935, followed by 27,210. Only a bearish breakdown below 26,240 will negate the bullish bias to see a deeper minor corrective pullback towards 26,030, which confluence with the rising 50-day moving average. So that's for the Hong Kong 33. Next up will be the Japan 225. So the Japan 225 continue to surge to a fresh all-time high over here. All right, and now also cleared above our first resistance level that we highlighted yesterday, 50,860, 51,030, now en route towards the upper boundary of this medium-term ascending channel that is still in place since 7th of April 2025 low, which is our next resistance level at 51,900, 51,940. So let us tidy up everything first. Okay, so this has been taken out. Let me remove it. Okay, so now, so given that the RSI is at the overbought level, but there's no bearish divergence. So without any bearish divergence, whatever minor pullback could be quite shallow instead. So the first pullback support level to look out for will be here. Okay, this level here will be at 50,755 over here, 50,755. Okay, so I do not want to tighten my pivotal support to 50,755 to be so tight, just in case I whipsaw. So pivotal support will be tightened up to this minor swing low that give rise to this ongoing minor bullish reversal, which is at 50,090, and also correspond to the lower limit of this steeper minor ascending channel that is still in place since the low of 10th of October this year. So this will be my Titan pivotal support level instead of 49,411. Okay, so this level here will be 50,090. 50,090. All right, so this will be my minor. Come on. Okay, okay. So let me remove this. Okay, so next resistance level will be the next Fibo extension level, 52,2775. 52,775. Okay, and also correspond to the upper limit of this ongoing steeper minor ascending channel from the low of 10th of October. All right, so let me put it in writing for you guys. 52,775 slash 830. Oops, sorry. Okay, so let me tidy it up. Okay, so still maintain that bullish bias on the Japan 225 that is representing the Nikkei 225 in any pullback. So as long as this pullback didn't surpass, first pullback support level to watch 50,775, maximum will be the Titan pivotal support at 50,090. Next two resistance level to watch 51,900, 940, followed by 52,775, 52,830. Only a bearish breakdown below 50,090 will invalidate today's bullish acceleration move to kickstart a minor corrective decline sequence, exposing the next near-term support at 49,410. Only a breakdown below 49,410 will see a deeper minor corrective pullback towards the 20-day moving average at 58,845 slash 58,440. So that's for the Japan 225. Next up will be the Germany 30. So Germany 30 going to trade sideways, but still holding above that pivotal support level that we highlighted at 24,150. So given the fact that it has been sideways since the start of Monday, this Monday over here, so apparently there is some form of stubborn resistance around this area here, okay, which is at 24,370. All right. So what I do now is I will still maintain that pivotal support at 24,150, maintain that bullish bias over here. But first resistance level to watch will be now at 24,370. So only a break above 24,370 will allow the bulls to gain more traction towards 24,480, then followed by 24,630. A bearish breakdown below 24,150 will see a choppy corrective decline drift downwards to retest the minor swing low of 22nd of October, which is so the lower limit of this minor sideways range configuration that has been taking shape since the high of 21st of October. As next intermediate support at 23,095, also confluence with very closely with the 50-day moving average. All right, so that's for the Germany 30. Next will be the major stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average hit our first resistance level as expected and try to do a minor pullback over here. So first intermediate support level to watch will be this level here. All right, this bunch of support level at 47,570 during the start of the European session yesterday before that rally take shape and the pullback happened. So I will tighten my pivotal support level to this week low, which is Monday's swing low at 47,400. So as long as this minor pullback today didn't surpass below 47,400, we saw an important graphical level as well. The minor ascending channel support, a steepened one since the low of 17th of October. So still maintain that bullish bias for the US Wall Street 30 to head up higher, for the next resistance to come in at 48,190, pardon me, 48,240 next. However, a bearish breakdown below 47,400 Titan short-term pivotal support level will invalidate today's bullish acceleration move to kickstart a minor corrective decline sequence heading down towards 47,800 47,086. Only a breakdown below 47,086 will deepen the pullback towards 46,760, which correspond to this rising 20-day moving average as well, very closely. Excuse me. So that will be the US Wall Street 30. Next up will be the SPX 500. So SPX 500 also rallied and hit the first resistance level at 6,910, 6,920. So that RSI is still hovering at the overbought level. So I will be using any chance of a minor pullback using yesterday's minor low at 6,877 for any chance to re-establish a bullish bias scenario again. Maximum pullback allowable for today will be at 6,850 to maintain that ongoing bullish bias. So as long as this pullback didn't surpass below 6,850, this bullish acceleration scenario will continue. Next resistance level to watch 6,940, followed by the upper limit of this minor ascending channel at 17 in place in 17th October at 7,000/7,015. Only a bearish breakdown below 6,850 will invalidate today's bullish acceleration move to kickstart a minor corrective decline sequence, a deeper one towards 6,810 and even 6,770. So that's for the SPX 500. Lastly will be the Nasdaq 100. So that's also surpassed as expected 25,950, 26,020. So that has been removed over here. All right, and now eroding towards our next resistance at 26,250, 26,350, and the next one will be at 26,545, 26,620. All right, Fibo extension cluster level. So this is a bullish acceleration level, breaking above the upper limit of the upper boundary of this minor ascending channel that has been in place since 17th of October. So I will tighten my pivotals, not say tighten out. The first pullback support level to watch out for will be this level here. Okay, 25,995, which is also the pullback line of this minor ascending channel resistance, now turns into a pullback support level. Maximum will be today's Tuesday minor swing low at 25,800. So that will be my Titan short-term pivotal support for today. As long as this minor pullback didn't surpass below 25,800 level, still maintain the ongoing bullish bias for the next resistance to come in after 26,340. That will be at 26,545, 26,620. Only a bearish breakdown below 25,800 will invalidate today's bullish acceleration phase to kickstart a deeper minor corrective decline sequence, exposing the next support level at 25,610 and Monday's gap up support at 25,440 next if 25,620 is surpassed to the downside. Okay, that will be 25,440 next. So that sum up the intraday technical outlook on the major stock indices. So very quickly, let's go to the commodities market. So very firstly will be the gold price over here. Let's go to gold. Okay, spot gold XAU/USD. So for gold, yesterday we do have a bearish bias hitting our support level, 39.43, 38.95, 38.64, all has been hit over here. So right now, what we could see for gold over here is now is doing a counter trend bounce over here. There will be a counter trend rebound. And also price action has started to leave from the oversold level. But what's interesting over here, this bounce, there is no bullish divergence, right? So there's a lower low over here, what we could see. Price action on the RSI also a lower low. All right, in line with the raw price action before it exit from the oversold, and now there's a corrective bounce. So I'll be using any bounces to fade the bounce to maintain that bearish bias. So key resistance level to watch will still be at the 20-day moving average, now turns into a critical near-term intermediate pullback resistance level. So that will be my pivotal resistance, 4,062, 4,062 over here. And also there's this graphical resistance level over here. This punch here. Okay, former minor swing low broken down, rejected on yesterday's Asia session at 4,015 before it plunges lower throughout the European session thereafter. So first resistance level to watch 4,015. Pivotal resistance remains the same at 4,002. That means, i.e., as long as this bounce didn't surpass 4,002, we will still maintain that bearish bias on gold XAU/USD as it potentially now shape a medium-term multi-week corrective decline phase within its major uptrend phase. Next support level to watch after 38,864 will be at after 3,894, 3,864 will be 3,800, 3,780, which correspond to the rising 50-day moving average. Only a bullish breakout above 4,062 will negate this bearish bias to see this bounce extend further to the upside towards this critical resistance level over here, 4,155 next, where previous bounces got rejected at the 20-day moving average previously tested last week on 22nd of August, 22nd of October and 23rd of October. So this 4,155. So only a bullish breakout above 4,155 will more or less allow the bears to be out of the woods, then where potentially we may start to see a more substantial recovery heading forwards for gold XAU/USD. Okay, so this will be a critical level to watch, 4,155. So lastly will be the West Texas crude oil. So West Texas crude oil reacted as accordingly and hit our first support level, 60.55, minus swing low 60.10 over here. Okay, give me a minute. Let me expand my screen so that you guys could have a. Let me do the setting because it's very slow. So I want to highlight for you guys the new levels. Okay, come on. Okay, let it come out. Let me pop up the box so I could change it. Okay, 60.10. Okay, so this will be the levels, the first support level. It managed to bounce over here. So given the fact that the RSI managed to exit from the oversold level as well, there's an exit for oversold level. But upon exiting from the oversold level, there is no bearish, there's no bullish divergence. Not bearish, there's no bullish divergence. Lower low on the RSI also correspond in line with the lower low on the raw price action on the West Texas oil over here. So given the fact that the RSI has really exit from the overbought level, there could be a minor bounce taking shape. So the minor bounce may hit the first resistance level at 61.80, but I will use any bounces to fade the strength to maintain a bearish bias. But I don't want to put that pivotal resistance to be so tight at 61.80 for today, unless we have a bounce, then thereafter a direct breakdown below 60.10, that will tighten it to 61.80. So for now, the pivotal resistance still remains the key resistance area here, 63 level, where previously it got rejected on 8th of October, rejected on 24th of October, that give rise to this minor impulsive downward sequence so far. So as long as this bounce, this surpass above 63 figure level, short-term pivotal resistance, next support level to watch to maintain that bearish bias after 60.10 will be at 59.15, followed by 57.90. Only a bullish breakout above 63 figure level will invalidate this bearish bias move and see the extension of this corrective rebound sequence taking shape again, extending further upside towards 64.55, followed by 65.70, which correspond to the key 200-day moving average. So that's some of all the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. Other than the FOMC meeting to look out for today, what are the key data to look out for? So what other key data to look out for, pardon me. So at 1 p.m. Singapore time today, we have Japanese consumer confidence. So that is considered a tier 1 leading indicator in Japan for the month of October. Market is expecting a slight improvement to 35.6, only a slight improvement because there's only 0.3% uptick from 35.3 that is being printed earlier on in the month of September. So if we have a rather strong level at 36 to 37 level, that could potentially weaken the dollar yen further and potentially increase the Nikkei 225 further over here. So that's 1 p.m. Singapore time to look out for. Then thereafter, as we head into the European session, nothing interesting except for those who has dollar Canada interest. We have the Bank of Canada interest rate decision before the FOMC meeting at 9:45 p.m. Singapore time, and at 10:30 p.m. Singapore time, we have the Bank of Canada press conference. All right, so for those who have interest in the dollar CAD and the CAD crosses. Then most importantly over here, we will have the EIA crude oil stockpile change. So that is a very weekly data that could move the intraday movement of the West Texas oil. So that will be at 10:30 p.m. Singapore time as compiled by the Energy Agency of the US. All right, then as we head into the early Asia session at 2 a.m. So this will be the all important session over here, 2 a.m. Singapore time, FOMC interest rate decision. So that has been penciled in already, 4%. The Fed funds rate will be cut by another 25 basis points to 4%. But what market is interesting is where is the forward guardians will be. So that will be the Fed chair press conference out later at 2:30 a.m. Singapore time. Then as we head into the Asia session Thereafter, tomorrow, we have a Bank of Japan interest rate decision. So that is more likely unchanged at 0.5%, given there's the new administration has started to take shape over here, led by the new prime minister. So I don't think Bank of Japan will be hiking rates anytime soon. So the next hike may come in December or early next year. But what's market interesting will be the quarterly outlook report. Will there be any further upwards revision in growth or inflation trend that could potentially move the dollar yen? Okay, so that will be out at the same timing as well at 11 a.m. Singapore time tomorrow potentially. And also tomorrow early Asia session, that means after 4 a.m. We start to see 3 mega cap stocks earnings over here. So let me share with you what are the earnings, what are these earnings. Okay, so this is the earnings calendar. So it'll be Meta, Microsoft, and Alphabet. All right, so let me share, guys. Okay, so all the way down to Wednesday. All right, so that will be after the close of today's US session. That means 30th of October after 4 a.m. Singapore time. So Microsoft, Meta, Alphabet will report their earnings, and all of them, the EPS rate, absolute rate is higher than a year ago. So market is expecting $3.65 EPS from 3.10 previously a year ago for Microsoft, $6.65 EPS from 6.03 previously for Meta, Alphabet, the parent company of Google, 2.33 EPS. Above 2.12 a year ago. So rather, we call it a rosy earnings expectation growth for these 3 mega cap stocks. So if the earnings manage to beat expectation, for sure it will have a positive influence on potentially on the Nasdaq 100 and the S&P 500 during the start of tomorrow's Asia session. All right, so that sum up today's daily dose of market insight. So today will be a rather highly pivotal day given the confluence of the risk events taking shape, FOMC meeting, coupled with the earnings release of the Microsoft, Meta, and Alphabet thereafter, after the close of the US session today. So it could influence the movement of these broad-based cross asset classes, especially on the FX market and the major US stock indices. So definitely risk management will be pivotal for today as well. All right, so with that, I'm Kelvin here signing off, and we shall speak again tomorrow. Thank you.